Today I'll be going over a requested video because a while back on my channel I made a video that was a $500 beginner investor portfolio. So basically I'll be remaking that video and updating it for September 2018 because I actually made that video almost exactly a year ago in September of 2017. So definitely go check out that video if you're interested in that. But this one's going to be a little bit of an updated version, and I actually didn't even re-watch that one to pay attention to what stocks I chose. I just wanted to kind of start fresh and choose different stocks, but some of these might be the same as well. And a pretty decent amount of these stocks, actually I think almost every single one of them I own as well. So if I own them, pretty good chance that I actually think they're pretty good stocks. But anyways, this is just what I would do if I had $500 and I had to start over investing, I guess you could say. So don't just totally copy this or anything. I don't think that's very smart to do either. But anyways, a couple things about why I chose these stocks and why I think these stocks fit nicely into a $500 portfolio. So when you're starting off with a portfolio, you know, $500 is probably a pretty reasonable amount that I think a lot of people might have to start investing. And if you have less than that, it would probably be pretty difficult to get in a handful of stocks as well as get a pretty well diversified portfolio. But $500 you could get you know, maybe like 10 stocks or so that are pretty decent stocks that, you know, might be pretty fairly valued and might be not be too pricey. So stocks like Apple and Amazon and Google won't be in this portfolio because obviously their prices are way too high. I mean, Apple could technically fit into this, but it would account for over like 50% of your portfolio, which might not necessarily be a bad thing, but for a beginner investor, I think you should probably be a little bit more diversified than that. But anyways, getting into it, the first stock is Microsoft. Microsoft is really the only stock from the technologies sector in this portfolio. And if you're an investor that was maybe trying to go for more growth oriented, maybe perhaps you'd consider getting into more technology stocks. But personally, I weight my portfolio a little heavier in tech, but I don't go too heavy. Like I know there's some people out there that go 60-70% tech. Mine's more around like 20 to 30%. But anyways, first stock, Microsoft. Microsoft's around $113 right now. And I'll put a list of all the stocks in the description if that's all you're here for, if you just want to take a look at that. Microsoft, a little bit higher PE ratio, around 53 or so, 1.7 dividend yield, which is very nice, and it's almost a $900 billion company, very large company. And why I think Microsoft is a solid tech pick for really any investor, but especially for beginner investors, is that I think it's pretty safe. One, because of that dividend yield. Two, because I think it's pretty fairly valued. Three, because it's such a huge company, it's probably not going anywhere anytime soon. And four, if you look at Microsoft's revenue streams, they have a variety of diversified revenue streams that are somewhat equally distributed, and really overall I really feel confident with their different revenue streams, and especially some of their subscription based ones. Those have been performing very well. They've been in that game well before companies like Netflix and Apple have been in it. So they've really been dominating in that, and I think are going to continue to do very well. The next stock on the list is AT&T, and AT&T could somewhat be pretty easily interchanged with Verizon, but I chose AT&T for a couple of reasons. One, actually, if you're watching this video literally right now, AT&T is around $33 right now, and they're actually at a really nice buy-in point. They've been on a pretty significant dip right now. I'm still slightly up on them because I bought them quite a while ago, but they have a very high dividend yield, almost around 6%, which is very hard to find with stocks that are also as solid as AT&T is, but almost a 6% dividend yield, very low PE ratio, right around 6 right now, $250 billion company. This is a stock that I think is pretty nice for beginner investors, and that I personally want to own if I was a beginner investor, because let's say even if like you do really poorly, you really mess up a lot, you pick some bad picks, maybe you try like day trading, you really mess that up, having that 6% dividend yield coming back every year can be very nice and can really supplement and help your portfolio a lot. But one thing with AT&T, definitely not going to be providing a whole lot of growth with that. It's going to be more of a dividend yielding blue chip stock that if you hold for a long enough time, your yield on cost is probably going to be very high. Next on the list is Coke, and Coke, once again, could probably be pretty easily interchanged with a handful of other stocks in its industry, or not its industry, its sector, I mean. There's a lot of really good stocks out there. Apple probably the best in its sector. Yes, Apple is technically a consumer good, even though it is a technology stock. I think there's some other ones like Pepsi, Procter & Gamble, Colgate, Nike. There's a lot of other stocks out there that I can think could somewhat easily replace this one, but I did choose Coke, one, because of its lower price. It's only around $46 right now, so that fits nicely into the portfolio. Two, out of pretty much all of those stocks I listed, besides I think Procter & Gamble, it's had the longest dividend yield return out of all of them, I think by quite a bit actually, if I'm not mistaken, but well over 3% dividend yield, very nice there. Pretty fairly valued stock right now, $200 billion company. Coke is one, once again, not going to give you very much growth, going to be equal to or close to the S&P 500, but with that 3% dividend yield, that adds on a lot of value in my opinion and makes it a pretty good stock for beginner investors. Next on the list is, is actually Walmart, and Walmart has one that has also declined quite a bit over the past. It actually is up. I take that back, but it was declining quite a bit. I picked up a couple more shares of it a few months back, and now it's back up. Walmart was a stock that I should say, actually what I said it was getting hit, I meant it was getting hit a few years ago, more like 2015, 2016, and is now come back up from that, and it recently dipped a couple months ago, but that was very short term. But Walmart, huge company, pretty fairly valued right now, nice dividend yield, one that will do good regardless of how the economy is doing. In a video in the past I posted stocks I thought would do pretty well in a recession, and Walmart was definitely one of those stocks that I think would perform pretty well during that. Next on the list is Pfizer, and this is a healthcare stock, and this one could once again be pretty easily interchangeable with other stocks that I own, like AbbVie and Johnson & Johnson, and maybe perhaps some other ones out there. But Pfizer, $42 right now, very low price, pretty low PE ratio as well, and only 11 PE ratio, which is very, very low. Pretty high dividend yield, 3.5 right now. I think it actually might be close to the 4. I'm reading some of these stats off the Robinhood app. Market cap, $250 billion. Very large company, one that has pretty sustainable different streams of revenue through different drugs and prescription drugs and things like that. This is probably one of the safer healthcare / biopharmaceutical stocks out there, and one that I like a lot, and one that I own in my portfolio. And if it wasn't really on such a high price hike right now, I'd probably consider owning a couple more shares of it in my portfolio. Next on the list is Bank of America, ticker symbol BAC. Bank of America is a financial stock that's actually pretty cheaper. Like if you look at some of the other bigger ones like JP Morgan, Visa, Wells Fargo and Co., Berkshire, just some of the big names out there, their stocks are actually very, very expensive. And by that I mean they're like probably most of them, I think off the top of my head, are well over $100, some of them closer to $300 range. So those stocks would probably not fit very well into a $500 portfolio. But honestly, maybe you would consider buying a share of Berkshire, because that one's probably going to continuously be pretty safe and give out pretty consistent returns. But I personally probably wouldn't want to have one stock holding 50% of my portfolio. So Bank of America, one that fits pretty nicely. You can even pick up a couple shares of it, because I think it's actually the cheapest stock in this entire list, only around $30 right now, but it has performing very, very well. Still at a pretty fair PE ratio, around 15, around 1.5 dividend yield, $300 billion company, so very, very big company. You'll notice with pretty much every single stock on this list, they have a pretty decent dividend yield. They have a fair valuation in terms of their PE ratio, and they're usually pretty big companies. But anyways, moving on to the next stock is Southern, ticker symbol SO. This is one on the list that you might not be as familiar with, because it's not necessarily as blue chip stock. Well, I guess it is a blue chip stock, but it's just not necessarily a household name or anything like that. But Southern is actually on a pretty nice dip right now if you're interested in buying them. Over 5% dividend yield right now. A stock that it does not offer very much growth at all, but it is probably going to be a pretty safe pick that has a very high dividend yield. And compared to some of the other stocks in its sector, I didn't have any stocks really from, or actually I really only had one from basic materials, industrials, and utilities in this portfolio, because personally I don't really invest in too many stocks from those sectors. And if you're interested in that, that's totally up to you. But personally I don't. They usually don't offer a whole lot of growth. There's a few out there that do, but they wouldn't fit into this portfolio very nicely. But Southern is one that does. Actually, there's two stocks from this portfolio in those sectors. But anyways, Southern I think would fit pretty nicely. And the next stock actually is DWDP, which is in basic materials, so kind of similar sectors there. Ones that I don't have a whole lot of weight in my personal portfolios, but DWDP is one I actually like a lot. If you look at it, you might think that it's a somewhat new stock, but it's actually just two companies that merged together, Dow and DuPont. There's two separate companies a little while ago. I think it was like a few months ago, maybe almost a year ago by now, but yeah, actually a little bit over a year ago now. They actually literally listed on September 1st, but anyways, $150 billion company, 67 PE ratio is a little bit high right now, 2.5 dividend yield. Company that I think is going to consistently give out that dividend yield, and one that I think actually has quite a bit of room to grow. Is around $68 right now, but I really do think that it has potential to go up a little bit higher than that. And next on the list, and the last one, is actually an ETF, and why I think you should maybe consider adding ETFs, and why I have a portion of my portfolio allocated to ETFs. I usually shoot for like 10 to 15%, and why I do that, and this one's right around 10%, it's a little lower than that, but why I do that is because ETFs offer diversity, liquidity of stocks. I mean, they kind of do a lot of things pretty well, I think, and I always think it's good to invest in ETFs in my portfolio that are well diversified, that have low expense ratios, and that pretty much target stocks that I would like to invest in but don't really want to. So I think that, makes a whole lot of sense to buy an ETF. But the ETF in this portfolio is SPHD Invesco SP500 High Dividend Low Volatility ETF, and ticker symbol SPHD. And why I like this ETF a lot, literally like the name says, it tracks high dividend stocks that are also not very volatile. So what that means is all these stocks, they basically chose a handful of stocks from S&P 500 that have high dividend yields, but also don't really go up or down a whole lot. And most of the stocks in their portfolio actually have a pretty solid history of just slowly and steadily increasing when taking those dividend yields into account as well. And they're not an actively managed fund, they're pretty low. They have a low expense ratio and a very, very nice dividend yield. And one other thing, which is different than all the other stocks in this portfolio, SPHD has a monthly dividend yield, which is nice as well. So anyways, guys, that's it for this video. That's my updated video of a $500 beginner investor portfolio. I'll have all the stocks listed in the description below if you're interested in just looking at that or going along with it as I talk through, or as you watch through the video. But anyways, once again, stocks were Microsoft, AT&T, Coke, Walmart, Pfizer, Bank of America, Southern, Dow, DuPont, and last ETF, SPHD. But other than that, guys, it's for the video. If you enjoyed this video, definitely head over to my channel, check it out. I talk about the stock market, investing, things like that. So if you're interested in any of that kind of stuff, definitely consider subscribing. But other than that, guys, thanks for watching.